Hi there, welcome to Kneppy Invest, and welcome to what date is it today? June the 6th, 2024. We have just on 1 hour of trading left, 51 minutes of normal trading, and then that 10-minute closing auction. And overall, you probably have to be pleasantly, maybe not pleasantly, you'd have to be happy with today's performance. However, the NASDAQ was up about 2%, so possibly you could argue we could have done a little bit better. The agenda for today's video, fairly similar to other ASX daily rundown videos. I'll go through, I'll look at a couple of tweets, and then we'll have a look at the ASX today, including the best performing and worst performing sectors, indices, and also companies. And then we'll have a look at the top 5 announcements of the day. I haven't decided on number 5 yet. I do have 2 possibilities, and I might have to decide that before we get to that part of the video. But definitely the first 4 companies were set quite early on, and you'll understand why when we get to those companies. And then I might have a look at a few charts, might touch upon how yesterday's company of the day has performed today, Karmaco. I think that was the company of the day. And then I'll have a look at a company I am following a little bit more closely. Okay, so let's have a look at 2 interesting tweets. Okay, the first one is from Jurian Timmer. Current bull market cycle is, I shouldn't have opened up that, is 20 months old and produced a 53% gain. By historical standards, and again, history doesn't repeat, but it often does rhyme. So you can look at history to gauge a sort of an idea of what might happen in the future. Maybe not what definitely will happen, but what might happen if you do believe in probability, that sort of thing. By historical standards, there seems to be life left for this bull, given the median 30 months and 90% gains that have been produced over the past 100 years or so. We might be only in the 5th inning, of course, using baseball jargon. You could have maybe used cricket jargon because the T20 World Cup is in United States, and maybe you could have said we're only in the first at bat, first inning. Anyway, but that's just me. Anyway, so this is a graph he also included, looking at all previous bull markets. I just want to know what is the shortest bull market. Looks like in 1932 to 34, that was a fairly short bull market. Another short bull market in the 30s. And the longest bull market looks like it was just before the GFC. Another pretty long bull market as well, from 82 to 87. And he also has a what do you call this? Line of best fit or something? I don't know. And we're right on that as we go. But it looks like we start to slow down. Who knows? Maybe this could be the longest bull market in history, or maybe one of the shortest ones, and this is it. We just don't know, because again, history doesn't repeat, but it often does rhyme, and anything could happen in the next year, or even next 2 years. No idea. All right, so that's something to keep in the back of your mind. And what indices is that? Is that any indices? Is that just the not the NASDAQ, the Dow Jones? I'm assuming so, to go that far back. And the last tweet is this one from Dr. Zayas. Dr. Zayas. Pretty sure that's from Planet of the Apes. Is that right? And he just did a little bit of evaluation of CSL, which I found interesting. But he also included financial year 24 expectations, earnings per share of $9.27. I suppose, I'm assuming that is expected earnings per share. So again, $9.27. Current share price of CSL is, I just had a look at it, $290. So all you have to do is a bit of a calculation on your calculator. $290 earnings per share, expected earnings per share of $9, and you get a PE ratio of this company of about 30. That's what I found, and I think he also gave that number here, PE ratio of 30.81, on the expectations of the profit and earnings this company will produce in financial year 24. And this company is still growing. You can see this from over the last 10 years, it's growing. This is exactly the company I like to see. Want to have in my portfolio for the long term, a company that just keeps on compounding, keeps on growing. Another reason I really like this company is the dividend. They're really aiming for growth. They have a fairly low dividend, So the dividend yield is fairly weak at 1.41%, but I don't care, because if you maintain a holding in this company, because they keep increasing their dividend, eventually on your initial capital, most important thing, on your initial capital, that dividend yield is going to keep on going up. Compare that to Telstra, where if you maintain a holding in that company based on your original capital, your dividend yield is probably going to fall, because I'm pretty sure Telstra has dropped the dividend. So this is CSL's dividend history over the past 10 years. And in fact, if you go back 30 years, it's really impressive. Just keeps on increasing. Compare that to Telstra. And the reason I'm doing this comparison is a lot of people would buy Telstra over CSL just because of the dividend and dividend yield 5%. So this is Telstra. It's gone down over the last 10 years. And you could say maybe, so it's creeping back up over the last few years, but I would always, every single day, I wouldn't even have to think about it. I would always choose CSL over Telstra. I think I'm pretty sure I've done a video on that. Pretty sure I've done a video. Let's have a look. CSL. Telstra. What about Telstra? Not sure how. Oh, here it is. Yeah, the power of compounding and why I invest something. And this was published on the 2nd of November 2021, so a long time ago. And I think what I did is I just had a look at the history of Telstra. I went back to like the 1990s sometimes, and if just compared the returns you would have received if you bought Telstra back then compared to the CSL. And I still remember back then, just after Telstra IPO'd, most people were talking about Telstra. What a great investment. Oh, I've got to buy some Telstra shares. What an amazing investment. Is the kicker though. Let's have a look at Telstra shares since then, since they listed. I'm being really unfair. I'm maybe being unfair on Telstra, but I don't care. So Telstra, when they listed, their share price was about $6, and it did zoom higher. Look at that. The first 4 months, it was on the ASX. Share price went from $4 up to just shy of $9. So a 50% return. So investors in Telstra were loving life. When was this? This was 1998. Yeah, October 1998. Still remember that. So much. I was actually in America at this point, but so much hype around the Telstra IPO. So now let's have a look at CSL. So Telstra share price has gone down since then. So in fact, you've lost your capital, lost a fair bit of your capital, by the way, almost halved. You've got some nice dividends, but look at CSL. Let's go back to CSL, monthly chart. Back in 1999, in July, 1998, in July, you could have bought CSL at $3. Now it's $290. This could have been a 100 bagger. And more than likely, based off your initial investment in CSL, the dividend yield on that initial investment is probably well over 100%. Might be over 200%, potentially. I don't know, because right there, we can actually see. Share price, you could have bought at $3. Back then, $3. And if you maintained a holding in the company, right now the dividend for CSL is, so dividend for CSL, the complete dividend, not the last one, which is $1.80, so about $3.80. Yes. So your dividend now is higher than the initial capital investment you made back in 1998. That's the power of a company that reinvests to grow. Telstra doesn't do it, CSL does do it. So don't always look at a dividend yield for a reason why you choose a company over another company, unless maybe you're retired and you need income, something like that. Anyway, so that's interesting. Not much engagement, although Claude Walker did reply. But yeah, not much engagement. So I'm going to like this. I am going to like it. There we go. Okay, so let's have a look at the ASX today. A pretty good day on the markets. So let's hone in on the best performing sectors and indices. All sectors are up. Telecommunications, energy, materials, worst performing. I expected a little bit more of a bounce in mining today. I did notice, if you go have a look at the markets, I did notice a nice little bounce in gold. Even copper had a nice little bounce, up 1% today. And this is, that's the monthly chart. Let's go back to the daily chart. 2 good days up in a row. But then I looked at some copper mining companies on the ASX, and they were down. So it's a little bit, and this shows you how negative sentiment can creep in to the share price performance. So a little bit of an increase in negative sentiment in copper. And even though the copper price has risen over the past 2 days, share price of these companies has fallen back. Maybe something to do with exchange rates. I don't know. So gold's up, nickel's still down. So still, I did notice a few nickel companies down. Someone also mentioned coal had a couple of bad days. Yeah, coal's had a couple of bad days. So I did have Whitehaven coal on my potential buy list just because of the chart, and I did not hit the buy trigger. Although share price of Whitehaven is up today, even though coal's down. So it's weird, isn't it? I think Sandfire. I'm presuming Sandfire is up. Let's have a look. Sandfire is up, but the smaller copper companies are down. Aries Resources down, yeah, 2%. 29 Metals, I believe, is down, maybe the same amount. And I just think this is a little bit of negative sentiment just creeping into these companies, forcing the share price down. On open, the share price of both these companies was up. The other one was it AIC? What AIM? No, what is it called? AIC Mines. Is that the copper company? Yeah, and this share price of this company is almost flat. And it opened up about, it didn't open at 48 cents. It went up to about 50 cents and has pulled back. But this could be a buy the dip situation. That's a nice looking chart if it is a buy the dip situation. Now, there is a potential I am going to be quite limited when it comes to trading in mining companies. That is one thing I'm learning because, again, all these companies have they're all price takers and it's all about the underlying commodity. So probably what I should be looking at is the underlying commodity first and then trade companies, unless I see the commodity at the bottom of the cycle, which I think lithium might be. And I would be more willing to buy or trade some lithium companies for the longer term with that expectation there's going to be a bounce, or just wait for lithium sentiment to turn because maybe it doesn't turn for a few years. All right. Anyway, that's materials, a bit of a tangent there. And IT is best performing, understandable. And gold's had a nice little bounce today, up 2.3%. Is that the best performing sector or indice? I would say it is. I doubt anyone's performed better. Yep, IT is just behind at 1.3%. And when I say just behind, I mean well behind, not just behind, well behind. And there was only one indice that was down, and that was emerging companies. What is emerging companies again? It's sort of not a mid cap, it's a little bit less than a mid cap. They do explain it here. Contains up to 200 companies that rank between 350 to 600. Yeah, so these are smaller companies, and still those companies and sentiment in this area has not adjusted yet. You can see that just by the year to date, only up 5.4%. 1 year, only 4.6%. And eventually, I think that will turn. In fact, you can compare that 1 year. Energy is the worst performing sector. There you go. In fact, I wasn't looking at sectors, was I? Or indices, I mean. Anyway. So, okay, let's have a look at the top. No. I was getting way ahead of myself. Let's have a look at the best performing and worst performing companies. I was going to have a look at the top announcements of the day. But we'll see, more than likely, we will see a few companies on my top 5 announcements on this list. In fact, yes, straight away, we do see one company, Firetail Resources, a company, even after the 150% rise in share price today, has a market cap of 17 million. This company comes in number 4. It's just the small company. But this could be just possibly, a company-changing announcement. Another company I was thinking of including into the top 5 was Osteopore, up 33%. That was one of the companies I was undecided by. So there were two companies challenging to come in number 5, and Osteopore was one of those companies. The other company, hopefully, is on this list. There it is, Equinox Resources, up 17.9%. I still have not decided. In fact, I might include both companies. I'll say both companies came in tied at number 5. I've seen another company in this list, Structural Monitoring Systems, came in at number 2, up 20.6%. And there is a reason why that company has come in a little bit higher than the others companies, and that's for a very important reason, which will become clear when I talk about structural monitoring systems. A company I've held in the past, over 10 years ago in the past, and I think this company is still waiting. You'd have to be a very patient shareholder to be waiting for this company to hit the pay dirt. I thought they were close back 10 years ago, but not quite. So that's companies by percentage change. Let's have a look by market cap. Mercury, New Zealand, Genesis Minerals. Nanosonics has a nice bounce. Land Resources, that's a lithium. Demerix is on this list again. Silver Mines. How's silver going? Didn't have a look at silver. Where's silver? Where is silver here? There it is. Oh, yeah, silver's had a nice bounce 2 days in a row. I'm not sure why Adriatic Metals is still going down. I'm pretty sure Adriatic Metals is still going down. Let's have a look. Oh, no, it's bounced. Okay, and what else do we have here? And that's it. Other companies that I remember released interesting announcements. Brazilian Rare Earths is doing really well. That's on this list. That's also in one of my screeners as a company in a beautiful uptrend. Anyway, let's move on to the worst performing companies today. And I would expect at least one company, potentially the number one company or top announcement of the day. And when I say top, I don't mean this is a really good announcement. I mean the most, maybe not the most price sensitive, but the more significant announcement of the day could be positive or negative. Now, Copper Search is down. I don't remember any of these companies releasing announcement. Doesn't mean they haven't. It didn't trigger anything in me. And there it is, Skycity Entertainment Group, down 14%. That company is number one on my top 5 announcements of the day. So let's have a look by market cap. And there it is, Skycity, down 14%. And it's pretty obvious why the share price is down. Centaurus Metals, so that's nickel, isn't it? I'm going to have a look at the chart if I get time. So got 3 charts to look at the end of the video, and I will get to these even if I'm running short on time. And otherwise, other than Skycity, I'm a little bit surprised another company is not on this list. Another company that released a negative announcement today, and that company came in at number 3. Another few companies that are interesting, Jet Corp, share price has really taken off. And then for some reason, we don't know why, share price took off. And the company released a price query from the ASX, and the share price has pulled back. Anyway, so I might talk about that company towards the end of the video. Okay, so on to the top announcements of the day. And coming in equal 5th, we have 2 companies, Osteopore and the other company, which is called Equinox or something. Let's have a look. Equinox Resources, share price up 15%. The company released an interesting announcement today in regards to a resource discovery, maybe not a discovery, or resource defined, a significant resource defined at Hamersley. I wonder if that is in the Hamersley Ranges in WA. I did not open up this announcement. I just saw significant iron ore resource. And I just went with those 3 words and went, oh, I wonder how the market's going to interact to this. And then I had a look at the chart and I went, oh, the chart actually does look interesting. So Equinox, is this significant? Well, they say it's significant, but it doesn't mean it's absolutely significant. I'm just looking at this, where the project is located, 30 kilometers south of Fortescue Metal Group's Solomon Mining Hub. That's interesting in itself, that it is close to the Solomon Mining Hub. But other than that, I'm not going to go through this announcement because it's just a lot of geological talk. Nice little location, exactly where it is. Yeah. There it is. I know a lot of these places. Parapurdue, Iron Valley, Christmas Creek, Roy Hool, Newman, Firetail, Eliwana. Even if you go outside this Hamersley's, I know quite a few of these mines. Purdue. And the reason I know is because a lot of these mines have airports, and that's one of the things I do with work. I forecast the weather for these airports. So it's really interesting. You could have 2 competing mines next to each other within 10 kilometers of each other, and they could have 2 separate airports, and you do 2 separate forecasts for these 2 separate airports. I'm thinking 10 kilometers is a little bit dramatic, a little bit, maybe it's a little bit more than that. But yeah, you do all these, what we call terminal aerodrome forecasts or TAFs for all these locations in the Hamersleys. So I actually do know the area fairly well. I should go on a scout a tour of that area, a funded tour of the area. Anyway, so that's Equinox Resources. And probably the reason I was a little bit more interested in this company is just the chart. And this is why I was like umming and ahhing about Equinox versus Osteopore, but Osteopore sounded really interesting, their announcement. So I just couldn't decide. So this is a daily chart for Equinox and potentially breaking or trying to break out a really good increase in volume as well. Not only today, but leading up to today, a really nice expansion in volume, and that's actually a good sign. So this definitely is a potential breakout. Equinox Resources. Let's have a look at the weekly chart. So it looks, according to this, hasn't been around for too long, listed or IPO'd in 2021, and the share price is at 40 cents at an all-time high, although share price has pulled back over the last 20 minutes. So that's Equinox. I don't think I've got this company on my watch lists, none of my watch lists. I think it's time to put it into one of my watch lists. Now, onto Osteopore, a company I have not looked at, but maybe featured in these videos a few times in the past. So share price up 33% in itself is interesting. But their announcement was like, this is a really interesting announcement. Osteopore is a fairly small company. It's still a small company. It has a markup, I'm saying 15 to 20 million. Well, I was way off. Currently has a market cap of 8.4 million, even with the share price increasing 37% today. By the way, Equinox has a market cap, I have no idea, 49 million. So let's go back to Osteopore, and there we go. So Osteopore, 18.7 million partnership with Singapore's NDCS and A-Star to develop next generation dental implants achieves key milestones. The project developed a 3D printing technology which can successfully combine patented biological additives and polymer compounds. Okay, so we're starting to get into areas where things, just words, go straight over my head. Non-cytotoxicity, that does sound good. You don't want things to be toxic. So when I say non-toxic, so I'm assuming cyto means tooth. I am going to look at that. I'm going to Google that. Let's learn something in today's video. Cytotoxicity is an endpoint function which is a result of a cell activation leading to death of a specific cell population targeted by a therapeutic protein. So I was well off. Nothing to do with teeth at all. I just thought this was something to do with teeth, and that would be important. I have no idea. You can tell I'm not a dentist. I do go to the dentist every 6 months. Anyway, the next generation dental implants, I do like any sort of advancements when it comes to dentistry and dental implants. I'm not sure if dentists are less inclined to adopt new technologies versus doctors. I do know doctors are very conservative when it comes to that. I'm not sure about dentists. In fact, the last time I went to the dentist, he actually did use some new technology on me. I was like, "Oh, is this new?" He said, "Yes, we just received it, and I'm using it on every single patient." It was like a scan of your teeth. It was really good, so you can see everything. It was really good. Anyway, so apparently this market is 27.55 billion, but that's a pretty big. So this company is a regenerative medicine company, global leader in 3D printed biomimetic bioresorbable implants. So that's the main reason I did like this particular announcement, just because what this company is doing sounds exciting. It does sound exciting, doesn't it? Now let's have a look at the chart. And the market has been in love with this company and maybe fell out of love fairly quickly just by looking at the daily chart, not the weekly one. A massive amount of volatility. So recently the share price of this company rose 361%, and more than likely I would have featured this company in this video, but a lot of selling on that day. And then the company fell 60% the next day. And then on the 22nd of April, it rose 74%. On the 23rd of April, it rose 140%. And then the share price dove 60% on the 8th of May. And I'm pretty sure that's a capital raising. Let's have a look. 8th of May, capital raising. Yeah, so a lot of volatility in this company's share price. But even though a lot of volatility, share price is now back to where it started on this first run on the 27th of March. The share price opened on that day opened at 8.4 cents. Share price now 7.4 cents. So it's actually lower than the open on that particular day. A little bit of selling today, lots of volume, so massive volume coming in today. In fact, highest volume this company has seen. But we have seen selling, and you can see why we have seen selling, because many shareholders possibly even traders bought at significantly higher prices. And when I say significantly, I'm talking about 5 times what the share price is right now. But they did a capital raising. Must have been a massively diluted capital raising. So this Osteopore, do I have this in my watch list? I've got it in my IPO watch list. And all my companies in the IPO watch list are companies that I've listed, but I've not had a look at. So I have had a look at this company, but not in depth at this point in time. So once this company gives me reason to have a closer look, I will leave this in my IPO. And what I mean by closer look would be another interesting announcement, possibly, or some indication this company is not a story stop. Now, one of the reasons I do that is just by looking at an Appendix 4C. So Appendix 4C for this company more than likely has not many receipts, if any receipts at all. And of course, what do you call this? ComSec's going to take 5 years to open up that announcement. Well, if I go to a market index and just go back to the Appendix 4C, here it is. This will open up within a split second. There it is. And ComSec is still trying to open up the announcement. So I just want to see, oh, it does have receipts, $655,000 of receipts. So if I just see this company moving towards becoming operating cash flow, free cash flow positive, I will have a closer look at Osteopore. But a lot of volatility in this company's share price. So will have a bit of resistance moving forward. But I just like the announcement. Dental implant, 3D printed dental implants or something like that. Just sounds amazing. Okay, so that's 2 companies coming in number 5. We have Osteopore and Equinox. Coming in number 4, we have the company with the best performance today, up 150%. That's Firetail Resources, up 132.6%. Share price is now above 10 cents, so a very important level. So 10 cents is a natural resistance level, and this is an acquisition. Now, this could be a company making acquisition. I still remember Northern Star making an acquisition in, was it 2011, 2012? That was a company making acquisition. Now, all these acquisitions don't necessarily or won't necessarily be company making, but this has the potential, just saying potential to do it. That's why probably the market is excited. Now, this particular project is in Canada. We'll have a look at the investor presentation. So in Newfoundland, I've always wanted to go to Newfoundland. And apparently, according to the management, this is a very nice jurisdiction. Can't even say that word, jurisdiction to invest. So it's a copper mine that had been mined previously, by the way, which intrigued me. And then I saw when it was mined. So here it is, and they've got some other companies. So there's actually a few ASX listed companies in Newfoundland: Firefly Metals, FFM, Copper, and Matador Mining, MZZ, Gold Project in Cape Ray, and a few Canadian companies, as you would expect. And the biggest one is Calibre Mining, with a market cap of 1.5 billion, a gold mining company. And there's another company with a market cap of 871, Queensway Gold. So it looks like gold and copper are quite popular in this part of the world. And here it is. I was planning a trip to Newfoundland in 2020, and I had planned to drive up the coast here to National Park, way up to the north. And so I would have driven very close to Firetail Resources, York Harbour Copper Project. Now, this has been a historic mine, as I said right here, but it was in production between 1898 and 1913. Yes, not 1998 and 2013. This is well over 100 years ago. This mine was in production. Sure. Now, that's not necessarily a negative, but yeah, just, keep your panties not in a twist. Is that the right expression? Don't keep your panties in a twist. I have no idea. Anyway, so it's just the potential that this could be a company making acquisition, just could be. And the next thing I want to look at is the chart for Firetail Resources. And that also made me think, possibly the market likes it. So according to TradingView, share price 11.5. Share price has pulled back in the last 20 minutes to 10.7. Not a significant pullback, but still, it's there. Some big volume coming in. Share price has risen during the day. And if the share price can close towards 11.5, 12 cents, that would lead this to be a fairly bullish one-day candlestick. And that would mean I would put this, I don't necessarily need that, but I will put this on my high volume spec watch list just to see how the market reacts to this company in the next few days. And this will come important when we look at Karma Corporation later in the video. So that's coming in number 4. We have Firetail Resources acquiring a copper project in Newfoundland. I'm pretty sure that's how you pronounce it, Newfoundland. Coming in number 3, I'm surprised the share price hasn't fallen a little bit more for IDP Education, down 6.5%. At one point in the day, share price was down well over 10%. So we have seen a little bit of a rally in the share price, and I would think that's probably in value investors seeing some value in this company. Share price has dropped a lot. According to ComSec, P ratio is down to 25.6. On a historical basis, that's fairly low for this company. Okay, so let's have a look at the announcement. And then what I'll do is have a look at the chart, and was the market saying something to us? I think this sort of announcement was expected from the market just based off the chart, and there was no reason actually to be invested in this company because of the chart. So regulatory and market update. So there has been a lot of negative sentiment in this company because one of the reasons I don't like this company is they are significantly affected by regulatory changes by any governments. This is a regulatory change, I believe, from the Canadian government, which has negatively affected IDP Education. So this is not Australian government, this is an overseas government. Okay, and then in fact, the first line they say in this update, a more restrictive policy environment in IDP's key destination countries is reducing the size of international student market. And that is true for Australia as well. This has negatively affected their testing and student placement. They expect a 15 to 20% increase in student placement volumes, a 15 to 20% decline in IELTS volumes, and solid average fee growth. Now, this would be considered a growth company, and the problem is adjusted EBIT financial year 24 is expected to be broadly in line with financial year 23, so no growth at all. And the other problem is what's going to happen with government policies in this space. Current trading and outlook. I actually didn't read this bit at all. While IDP continues to grow, strongly outperform broader market trends, the various policy changes have impacted the company's student placement and testing volumes in the second half. Yes, this company, just like a mining company, can be significantly affected by factors outside of their control. So that's one of the reasons why I'm not the biggest fan of this type of company, because of government regulation. And their responses, they talk about cost reduction. That's one of the things they're doing is cost reduction. And of course, they're going to have to do that. Product innovation, I don't know how that's going to help if there's negative government regulations. So let's have a look at the chart for IDP Education, ticker code IEL. And to be honest with you, unless you thought this company was a really high quality company, there was no reason to be in this company at all. I do know Rudy Vallenpick, whatever his name is, loves this company. And I'm pretty sure he's a long-term holder. And yeah, just look at this chart. This chart was telling you something's going on here, something's wrong. So I put this line here, support level at $21. It fell through that fairly easily. It was trying to stay above it for a long period of time and then fell through it. And share price is now down almost, we'll say 33% from that level at $14.85. Is this getting to an interesting level in terms of long-term? So if you do look at the chart, long-term chart, the weekly chart here, up until about 2022, it did look, well, actually the end of 2021, this did look like a high-quality company just by the chart. Share price got to a high of $40. Now it's $14.85. $40. I still remember looking at this company and go, why? This company has a P ratio of 60 or 70 back then. Why? The growth in this company, it could still grow, but not as significant rates. And that regulatory issues this company is always facing. But even looking at the weekly chart, significant downtrend. Weekly downtrend. Their share price is at levels we saw just post COVID-19. And if the share price falls, say, lower than or below $12.80, that would be negative. And if the share price falls below $10, that would be a multi-year low. We saw the low, this company's low during the COVID-19 financial panic of $10. Round numbers. Let's see, was the low exactly $10? It's very unusual if it was exactly $10. So the low was $9.90. So again, round numbers, $10. Fairly big, significant round number. So that's coming in number 3. We have IDP Education. Coming in at number 2, we have Structural Monitoring Systems, a company I don't know as much now because when I was a shareholder of this company way back, well over 10 years ago, I just liked their potential of their technology, and they have yet to monetize that potential. That 10 years ago, and I thought they were close 10 years ago, but they did buy a company that was generating revenue. This has not worked for other companies. I know a company called Andiotech did this maybe 8 years ago. It did not work. They bought this company to increase their revenue, maybe even become profitable. And within 2 years, I think they sold out. Anyway, so SMS forecast maiden quarterly profit. That in itself is a top 5 announcement worthy title. Structural Monitoring Systems forecast maiden quarterly profit. This could be the inflection point for this company. So revenue growth of 27%. Last year was 43%. So nice growth in revenue, up to 28.4 million. So it's still fairly low, but margins must be enough that the EBITDA, or the company's profitable, EBITDA up to 3.4 million, up from 0.27 million, although they're using different terminology here. So group EBITDA of 3.38 million versus financial year 23 group LEBITDA. Wonder what L is. What's LEBITDA? I've never seen that before. In fact, I've just Googled it and there's nothing. Nothing is popping up. Nothing is popping up except a French article. I'll be honest with you. When you do use that, you should have a sort of a definition somewhere, and they haven't got that. Anyway, so profitable. This company's profitable. I'm excited. For those who don't know what they know, I'm just going to. This is to do with the aviation industry, and I'm trying to remember their technology. It was to find cracks in airplane structures. That's if I remember correctly, to find cracks in airplane structures, which is quite important. You don't want to see the structure of an airplane cracking. So that was their technology. They tried to do a deal with Delta. Maybe they did do a deal with Delta. I'm pretty sure that might be CVM. Yeah, anyway. But they are profitable. So let's have a look at the chart. Now, I've mentioned in the past that sometimes just by looking at a chart, you can increase your luck, the probability of a company releasing a positive announcement, because companies who are downtrends are more likely to release negative announcements. Companies whose share price are in uptrends are more likely to release positive announcements. But it's not 100%. And Structural Monitoring Systems is one of those companies whose share price was in a downtrend, but released a positive announcement. So let's have a look at this company's chart. First, we'll have a look at the long-term chart. In fact, we'll go back all the way back to when I was a shareholder of this company. Way back here. There it is. So during this massive uptrend, I was not a shareholder during that whole uptrend. So this was back from 2013 through to 2016. I think by 2016 or some point in that year, I was completely sold out. I just had to take profits and complete profits. But I was a shareholder way back. I think I initially bought some shares, maybe 2012, 2013. One of the reasons I initially bought shares in this company is when they did a capital raising at a premium to the share price. I'd never seen that before. And I went, wow. And they didn't do the capital raising to shareholders, if I remember correctly. It was just to their largest shareholder. And if the largest shareholder was buying at a premium, the capital raising at a premium, I went, yeah, that was a good sign. And it was a good sign. So don't ignore capital raisings that are done at a premium. I think Genetic Signatures just did that, although they did release a really interesting announcement. But since that high in the share price back in 2016, this company has struggled. No significant trend in the share price. And actually, it's down more than anything else. But if we look at the daily chart, share price has been in a downtrend since about November, even before that, October, November last year. And then all of a sudden, the company releases this positive announcement. But my only issue with this positive announcement is the share price is in a downtrend. So there's a lot of resistance moving forward for Structural Monitoring Systems, or SMN. And we have seen that just with the one-day candlestick. So we do see a bit of a shadow above the main body, which is telling me a lot of selling has come in today because of all these shadows who bought at higher prices, they're selling out. They've seen the opportunity to sell out, and there's not enough demand to maintain the share price at those levels. So the share price pulls back because of an increase in supply. This is a problem when the share price is in a downtrend and you release a positive announcement. The share price might not respond straight away. It might take a few announcements to turn the sentiment in the company. So structural monitoring systems is not there yet. If this was reversed and this company had reached maybe at least a 6-month high in the share price, this would be a really interesting announcement, and I could even trade it. Anyway, coming in at number 2, we have structural monitoring systems. Coming in number 1, Skycity. So there are down 12.8%. There have been talk that Star Entertainment Group is starting to look interesting in terms of valuation, but just hold your horses. Hold your horses because Skycity has just released a trading and dividend update. I don't care about the dividend update, but they also released an update on South Australian casino duty dispute. That sounds nasty as well. And let's have a look. Or no, is it? Let's have a look at the share price. So they released it at 3.20, which means the share price would have been in suspension for 20 minutes at $1.40. And the share price did not move on that announcement. So it's an insignificant announcement, even though it's marked price sensitive. So let's have a look at Skycity. So this is a trading update. That's all I care about. Don't care about dividends. And this is a downgrade. This is a definition of a downgrade. So previous guidance, they expected underlying group EBITDA of between 290 and 310 million New Zealand dollars and underlying group profit of between 125 and 135 million New Zealand dollars. Now they expect EBITDA to be between 280 and 285, definition of a downgrade, and profit to be between 120 and 125 million. That's a definition of a downgrade. And the most important thing is the reasons behind the downgrade. Are these structural issues with the company or maybe macro issues? And it seems like the first, blame goes to macro. The ongoing challenging economic environment impacting customer spend, although visitation numbers across all sites remain strong. What does that mean? I don't know. A delay, so this is more of a company issue, a further delay in the opening of the Horizon Hotel, now expected in August 2024, due to delayed completion of works by the contractor to the project. So they're putting blame or placing blame on someone else other than themselves. So they're blaming the contractor. It's your fault, contractor, which impacts hotel food and beverage across the Auckland precinct, and a potential increase in Adelaide casino duty expense. So maybe that ruling today, we saw some clarification on that. Early outlook for financial year 25. This is also important. I actually did not read this. Current trading conditions continue to reflect a challenging economic environment, particularly in Auckland, and the company expects this to continue through financial year 25. Okay. They actually give some EBITDA expectations for financial year 25. That's interesting in itself. I'm not sure how you can do that just now. But anyway, is there any reason or was there any reason to be interested in this company? Let's have a look at Skycity's chart. And the answer to that is no. The answer to this, just like that other company which I talked about, IDP Education, the answer to this is no, not now, not yet. Let's be patient. And there is potential. This company never turns around. There is that potential. And if that happens, you've saved yourself. So what I like to do for these type of companies is I will keep a track on the chart and keep a track on the announcements and just wait for that announcement where things are turning positive. We're not there just yet because this was a negative announcement. You can see that in the share price, down 14% today. And not only that, share price at these levels, $1.38, is at a multi-year low. The only previous time the share price was at this level was back during the COVID-19 financial panic. Share price fell during that period to $1.10. So we're not far off from the share price of this company being at maybe an all-time low. I wonder if the share price of Star Group was affected by this. A little bit. All right, so let's have a look at a few charts. That is Skycity coming in number 1, the most significant announcement of the day because it's a downgrade. So let's have a look at a few charts, starting with company that did come in number 1 yesterday. Karma Co International. I did see, I wonder if I actually kept it here. I do have, no, I got rid of it. So in one of my Facebook groups, someone mentioned they're going to be trading Carmaco Corporation because they expect the share price to go to like 3 cents. And then he said, well, maybe this is a buy the dip situation. I'll buy if there is a dip. Well, there has been a dip. Share price down 34.6% today, which is sort of expected because the share price rose. How much did it rise yesterday? Rose 117% yesterday. So pretty big volume coming in as well. And pretty big volume as well today. Share price at 8.5 cents. The low is 8 cents. Open at 12 cents. So the chart looks pretty ugly for Carmaco. You have to look at the daily chart, not the weekly chart. So this is a potential breakout, and this is a potential buy the dip situation. Just potential at this point in time. I Even though the share price is below 1 cent, I actually could imagine just taking a little bit of a dip in this and just seeing how it goes, because I actually did not expect this sort of dip. So this is just a potential buy the dip if you are a real big risk taker. That's the way I look at it. So that's Carmaco. Interesting 2 days for the company. Wouldn't be surprising to see if they do a capital raising. Share price has, oh no, they're probably too late now. Carmaco, a company I'm really interested is eRoad. I think there is signs that this company is starting to turn around. Chart, a lot of volatility in the chart. Share price in a well-defined downtrend, massive downtrend. No reason to be interested in eRoad during this well-defined downtrend. Look at that. Oh, huge. Share price fell from about $5 all the way down to low of 40 cents. Now, I don't want to try to buy the bottom because you just don't know where the bottom's going to be. But the bottom looks like it was reached in May of last year at 40 cents. Pretty sure there was a takeover bid for the company. Takeover bid fell through. Share price has been continued to be a little bit volatile. Then the company released a positive announcement the other day. Forget exactly what. What was it? Announcement was achieves positive free cash flow in financial year 24. We have seen a positive reaction from the market after that. Share price a few days later, after they released that announcement, fell to 80 cents. That's just shareholders selling out because they bought at high prices and there was a little bit of selling and they went, oh, I've got to sell at 80 cents. Now the share price has rebounded up to 94 cents, I believe latest share price is. And it looks like it just wants to break out above $1. I think a really good buy position with this company is about $1. If it can break above $1, that would be positive sign for this company on the back of this really good announcement that the company released a few weeks ago. So that's eRoad, a company that is definitely on my watch list. Centuris Metals, someone did mention this is a nice play. Pretty sure it's nickel in Brazil. The share price has really pulled back the last 3 days. Share price has fallen from 53 cents to 43 cents. This is one of the reasons why I'm now more hesitant to buy or trade mining companies, because your position, even if the chart looks pretty good, your position could be wiped out in a few days because of complete negative sentiment or shift in negative sentiment, completely shift in negative sentiment in a particular commodity. Looks like that may have happened with nickel just based off this particular share price. So company that was on my wish list, but I don't even think this might not even be buy the dip. Last 3 days have been really negative. Finally, Jat did an ASX price query. Share price just took off, and I don't know why. This is food manufacturing. They do have a fair bit of revenue. So last year they had $58 million of revenue, but were not profitable. In the last half year, $44 million of revenue, not profitable. Low margins in this area. Don't even know what sort of food they do, but for some reason, the market has been interested in this company the last 2 months. Share price has rallied from 32 cents to about 68 cents, or even 70 cents at the high, and they released a price query. So the ASX said, why is the share price running hard? Why? On higher than normal volume. That's the other thing. I don't know if the company's released anything. Let's have a look. Have they released anything, particularly start of May? So let's go back 3 months. Start of May, nothing. And let's have a look, before I have ended this video, let's have a look at their most recent Appendix 4C. That's the last major announcement the company has released. Would you buy this company, even think about buying this company on this particular Appendix 4C? Forefront of innovative technology servicing the world's largest retail markets. This company, I think, has changed tracks. I'm pretty sure they were selling food stuff or something. With a track record of successful product development and distinguished technology, Jat is a leader producer of supplementary food products, plant-based products. That's weird. Forefront of innovative technology, but then they're talking about food and plant-based products and dairy food products. How is that innovative tech? Oh, okay. All right, that's and they were operating cash flow positive by 587,000. Okay, so yeah, okay, so I suppose that is positive for this company. That was way back. Yeah, maybe that was the reason for a shift in sentiment in this company, just based off the company being operating cash flow positive, $580,000. Okay, that's all I got for this video today. Don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.